Hey guys, welcome back to the channel. So me, Kevin, made a video called Should You Sell Stocks or Hold? Critical. And he's been making videos like this and putting out comments about the coming recession and about selling your stocks. And ultimately, I want to give my response and my advice regarding his stance on things. And I am a big fan of Meet Kevin. I do watch some of his content. I think he gives great insights to the retail investor. However, when it comes to this particular thing that has been going on, I do not necessarily agree with him, and I will explain why. So it started a few weeks ago where Meet Kevin put out a video that he sold everything, and this is after he was saying that he was buying the dip. And from there, he got a lot of blowback because of this move, and ultimately it's his money, so he should be able to do whatever he wants with it. But because of that blowback, he started to come out with more videos, and this more recent video, which was a strategy that he said was depending on how much money you had in a portfolio. So he said if you have, let's say, under $40,000, $50,000 in your portfolio, then you should continue to just dollar cost average and buy into the stock market, and over time you will do fine. However, if you have more than this, then he's saying that you could have a great opportunity by selling, and then because of all the data that he brings up and the recession that is most likely coming, then you will have the ability to buy at a much cheaper level, and from there you can really get some high gains due to this move. So there are different approaches that you can take when investing in the stock market, but taking that binary approach of either being 100% in or selling everything is typically not the way you should go about it, because that fundamentally goes against the principle of you're not able to time the stock market. We can't time exactly when to get out, and we even see with Kevin, his portfolio went from I think over 50 million to 20 million, and also to get back in, most people it goes against their emotions to be able to buy when the market drops substantially. And rebounds happen pretty quickly. So by the time that is happening, you are still sitting on that cash. What I think happened to Meet Kevin is he went into the stock market mainly in 2020 when the stock market was rebounding and every speculative stock pretty much was having immense gains. And he was investing in companies like Shift and Matterport and really touting about them, putting more and more money in them. And because of this, when the downturn came and non-profitable spec stocks were getting hit so hard, his portfolio went from, I think it was over like 50 million to 20 million. And therefore he felt like, okay, I got to sell everything. And guess what? He still has $20 million. So even if he misses the rebound in the stock market or not being in the stock market at all, he has that financial independence. However, he was saying 40 to 50,000, you can take it out and put your money back in and make huge gains. However, someone with 40, 50, or even 100 grand, they still don't have their financial independence. And I think it's a very scary mentality to take, which is the get rich quick mentality. You want to look at the stock market as either I'm putting in ETFs or a diversified portfolio and dollar cost averaging over time, or I pick specific stocks that I truly believe in and I dollar cost average over time. And over the longer term, I will create that financial independence. But just going in and out is really a strategy of this get rich quick mentality, and I think that is very dangerous. So what can you do when you believe that the market may fall substantially? And this is also what hedge funds do. They hedge against their positions. So you can either take an inverse ETF that basically goes the opposite way that the market does. So if the market crashes, most of your positions are in long. So yes, they will come down. But now you also have a position that also gains when the market goes down, and you take that money to rebuy into your longer positions when you feel that we're closer to a bottom. And if the market continues going up, then you're also good. Yes, you limited your gains to a certain extent, but that is what hedging is. Or you can take a short position against specific stocks. So let's say you don't know exactly what the market is going to do. So you can, let's say, be long Tesla, and at the same time, let's say you're short Rivian. So then you're good no matter what way the market goes. And you really day to day see exactly how big of a short or a long you would want in the different positions, but you're still not fully outside the market trying to time exactly when to get in. Lastly, if you believe that we are headed towards a downturn, then you can just go more cash heavy. So you're not fully outside the stock market. Say you go 30% cash or even 40% cash if you really think that we're overvalued and headed towards a deep recession, but you're still 60% in the market, and then slowly you can redistribute it into different positions. But going fully out is a strategy for someone who isn't reliant on the stock stock market for creating that financial independence. And this is really when you have millions. So I highly suggest that one should not take this approach unless they really have that financial independence and could afford that. But in the case that you don't, you want to take the longer term approach, not to get rich quick. You want to invest dollar cost average, be in good companies, and in the long term, you will do fine. And if you think in the shorter term, there will be some volatility and a downturn, then definitely there are inverse ETFs out there, which you can bet against the market and you can take some short positions. But to just go all in or all out is not really the strategy that anyone takes, including hedge funds and other investors. Thank you so much for watching this video. I hope it was helpful. Please like and subscribe, and I will see you in the next video.